Nigeria's private sector entered 2026 on a softer footing, with the Stanbic IBTC Purchasing Managers Index falling below the 50-point expansion threshold for the first time in over a decade in January. January's PMI slipped to 49.7% from 53.5 in December, reflecting stagnating new orders, weaker activity in wholesale and retail trade, and rising cost pressures driven by higher raw material prices. Yet agriculture, manufacturing, and services still recorded growth. Dr. Samson Simon, Chief Economist, ARC Economics and Data Limited, joins me for this. Thank you so much for joining me, sir. All right, and I also have with me Samuel Oyekanmi, Research and Insights Lead, Northern Berger Financial Group. He also joins me. Thank you so much, Samuel, for joining me today. All right, now Nigeria's PMI fell below the growth threshold after 13 consecutive months of reading above 50. What do you attribute this to, Dr. Simon?
This is a little bit unusual. Unusual in the sense that for a long while now, for months, the numbers have been above the 50-point neutral level. And just out of the blue, though it's expected, normally January numbers tend to be lower than December numbers. But the problem is that the contraction that we saw, and this doesn't really augur well, that we're seeing a contraction in January. And this is largely attributable to new orders being lower than usual, being mooted. And it's not as bad because it's almost 50 point. At 49.7 is almost at neutral level, but it's slightly below. So that's why it is a problem. And the main contributors, the main drivers that brought these numbers below the 50-point mark are retailing and wholesale. These are the main contributors. And then the new orders that are also lower than the 50-point no change mark. Those are the items in the Purchasing Managers Index that made the numbers to contract for the month of January.
All right, we know that post-festive slowdown is also, usually one of the causative factors, but you do not think, it accounts for, maybe reasonable percentage?
Can you repeat the question, please?
But I said usually would say that January starts slow and then there's this post-festive slowdown. Now, looking at what we have, would you say that the contribution of that particular factor is muted?
Yes, the contribution is muted in the sense that it is normal, it's expected, like you said. Normally, January demand tends to be lower than usual, right? That has been consistent for the last 6 years, right? And for a large chunk of the time since when this index has been taken since 2014. But what makes this particular time the exception is because it's below 50 points mark.
Okay.
That is quite unusual, and it shows contraction, despite the fact that the economy is expected to expand this year. In fact, more than it expanded last year.
All right, thank you so much.
So it's a blip anyway. It's not sustainable.
Right. Samuel, I believe you can hear me. Now, while a post-festive slowdown is typical, don't you think a sub-50 PMI reading in January, the first in a decade, actually suggests a more structural weakness in the economy? Samuel?
Typically, always, can you hear me?
Absolutely. Go ahead.
Yes, I said that typically the Nigerian economy has always been pretty much marred by a number of structural issues. And while we expected that PMI readings should be slower compared to December as a result of the slow start of the year, having it below 50, of course, indicates some level of structural imbalance. And one of the things that I will point out first, the high interest rate environment has pretty much been for quite a number of times now, over 2 years. And we're already seeing that sustained impact on business and their ability to be able to do as much business. Again, don't forget that this is an ultimate year to an election. and quite a number of uncertainties will also surround business activity. I see that one of these, the high constraints in terms of high cost of borrowing, and also some form of anticipation that we might be seeing some slowdown in terms of cost of borrowing at some point this year could also mean that businesses rather wait rather than pretty much put those costs in January. And I think those are notable structural factors, at least different from usual ones that always mention around security and whatnot.
Right, let's dive deep into this particular report now. Now, we saw growth and agriculture recording, expansion, including manufacturing and services. But then the PMI report showed that, weakness at the start of the year was centered on wholesale and retail companies. I mean, they were deep below the 50-point growth threshold on a seasonally adjusted basis. Does this point to anything significant? Do we need to, begin to watch that space?
Of course, what you find is that the likes of wholesalers and retailers have been the trade segment of business. And like I mentioned earlier, a number of things like often rely on borrowing for their working capital and then using that to fund business transactions. Again, one of the things around the election that I also mentioned is that the uncertainty pretty much impacts trading business. And what you find most of these businesses is that they very much want to wait and see apply some form of wait and see approach to see what's going to happen in the early part of this year before we start moving forward. I don't think anything substantial. I've also looked at the CBN PMI numbers, and there's really nothing that spoke to the eye in terms of anything to be worried about. But of course, reading below 50 gives us an indication that we should start looking at some of these numbers more intense, but nothing out of the ordinary. I think it's going to correct itself to move the way to Q1 into Q2.
Okay, Dr. Simon, let me come to you now. All right, we're looking at output prices rising to a 4-month high on the back of higher input costs and all that. Should we expect this to feed through into January's inflation figures?
Of course, it should. Mind you, inflation is still climbing, and so what happened for the inflation numbers for December, right? While the deceleration is expected, the inflation will still be in double digit. And these PMI numbers are predictors of what will come. They are leading indicators. So they are just demonstrating that the numbers will likely climb. I know the contraction is not much, so we don't expect it to be sustained, but it will have some impact on inflation numbers in the coming months.
Right. So if I get you correctly, you feel that, the numbers will improve through the year. I mean, we won't continue to see the 49.7 levels or the lower levels, right? Is that what you're saying?
No, yes, that's what I'm saying. The economy is expected to expand this year. In fact, do better than it did last year. So this, I believe, is just a blip. It's just something that is temporary. Of course, measures should be taken for such not to be repeated or for it to reoccur in subsequent months, but generally is just a one-off. That's the expectation.
Okay. Do you see any, factor that could derail this outlook of yours?
Of course, it's a warning sign clearly that we need to do something about retail components of the PMI, and then the wholesale component, and also the purchasing managers, other components of the purchasing managers index, so that they can perform better than what they have been doing. It is a warning sign, and measures should be taken to tackle them, but it's generally expected not to be sustainable, considering the fact that according to different authorities, whether Stanbic Bank or Standard & Poor's, the IMF, the CBN, so many have made projections that the Nigerian economy is expected to do well, better than this year in 2026 than it did in 2025. And when PMI is one of the indicators to show that the economy is doing well. So this is just a blip, like I mentioned earlier. The economy is expected to do well, relatively, this coming year that we have already started.
All right. So what's your figure? What's your GDP, projection? Let's close with that.
It should be in the region, it should be between 4 to 5%.
4 to 5%. Wow. All right, so if you can hear me, Samuel, what about you? What's your projection?
I also align with that 4 to 5%. That's also what we have published here.
All right, thank you so much, Samuel Oyekanmi, Research and Insight Lead, Northern Berger Financial Group. Thank you for your time on the show today.
Thank you.
And Dr. Samson Simon, Chief Economist, ARC Economics and Data Limited. Thank you also for coming on the show.
Thank you.
You're watching Business Edge. We're going to very quick commercial timeout, and when we come back, we have more for you. Stay with us. Hello, good morning.
Good morning.
Online banker, how you doing?
I'm well. How are you?
Very well, thank you so much. Good to have you join us today.
Good to be here with you.
Okay, so are you in Nigeria? Where in Nigeria or in the abroad?
I'm currently in Abuja.
Okay, can you move a bit to your left so you can be at the center of the frame?
My left this way.
That's your right.
My left is
your
this
left that way.
Am I at the center now?
Yeah, sure. Yes, you are. Okay, can you take this to the conversation, please? The prompter, yeah.